Good afternoon, everyone, and welcome to our discussion on the outlook for the consumer sector. Since the economic crisis in 2022, consumer purchasing power has been very constrained. Over the past few years, they have been hit by several different impacts: historically high borrowing rates, steep currency depreciation that saw prices of goods across all segments being raised by a couple of fold, increased taxation in terms of personal taxes as well as VAT changes, all of which has really squeezed the wallets of consumers. Some of these pressures have now eased, at least partially. Lending rates have come down. We have seen about 11% in terms of the WPLR, and we moved into an easing monetary cycle. Import controls have been released, and the currency has also appreciated about 20% from the 370 levels we saw a few months ago. But has the pressure on the consumer's wallet actually started easing? How have consumer patterns started changing, particularly over the last couple of months, and how are the expectations for 2024 and 2025? So, these are the couple of questions that we hope to address over the next hour, and with us we have an esteemed group of panelists that will help us in answering some of those questions in the consumer space, covering essential, discretionary as well as durable items. So, to introduce our panelists today, we have Mr. Ravi Jayawardena, who is the Group Chief Executive Officer of the Maliban Group, Ms. Sabrina Esufally, Managing Director of the Hemas Consumer Brands, and Mr. Mahesh Wijewardene, Group Chief Executive Officer of Singer Sri Lanka PLC. So, before we start, I would like to mention that we will have a Q&A session at the end of this discussion. So, please send in your questions using the Q&A option on the webinar. So, to start off with Sabrina, Hemas predominantly operates in what we would consider as more of an essential consumer space. What are your thoughts in terms of the current sentiment that you are seeing in Sri Lanka? I mean, it's been a tough 2 years, as we said, but are you seeing signs of wallet pressure actually easing?
Yeah, thanks for that question. So I think it's really important to remember the history, right? Because I think as Sri Lankans we have a lot of recency bias. So, just in over a year, consumers saw the same basket of goods doubling in price. So, and I think what happened last year is that savings to a large extent had depleted. So I think incidents of vulnerability were at its peak about 6 months ago. But certainly since then, we know the macroeconomic factors have improved, and we haven't seen that directly impact consumption as yet, but we're cautiously optimistic for 2 reasons. One is typically there is a lag effect between consumption and macroeconomic stability. So that typically takes 4 to 6 months, and so we're hopeful that consumption will come back. But actually probably more importantly, for the first time in I think over 12 months, we've seen consumer confidence increase. And this is often a lead indicator for consumption picking up. So I think that's largely because maybe the inflation relating to VAT didn't happen the way consumers thought, and also that we've had a good agricultural season. So I think particularly in the rural belts, we see consumption coming back much faster than urban demand.
Thanks, Sabrina. So, just in terms of what you mentioned, there has been a very emphasized approach in terms of how consumers move to essential goods, and that's I think what they've prioritized over the last couple of years. Are we seeing the starting signs of them starting to move a little bit or upscale a little bit from that kind of purchasing pattern, and how are those dynamics changing?
Right. So again, it is a journey, right? And we have to remember that in essential categories, there was significant volume decline. Volume decline that we hadn't experienced, I think, for over a decade. And so essentially what that means is that in products that we sell, like home and personal care, things like laundry powder and soap, people were just using less.
Yeah.
Right. So I think before we talk about non-essentials, I think this category will have to start, or these categories will start building back consumption, and we see that happening. So as I said, it's a cycle. These essential categories, I think consumption will come back. I don't know if it will come back to sort of pre-COVID levels, but we're cautiously optimistic that it's building back, and typically when that builds back, then consumers start to look for non-essentials to supplement their basket. So we're definitely seeing that.
Okay, so you're seeing that the essential sort of kind of the weight of purchase also is increasing right now, but you haven't necessarily seen the migration to the higher level of consumption.
That's
Is that right? Okay. Moving on to you, Mr. Ravi. In terms of Maliban's portfolio, and particularly focusing on the milk side of things, again considered relatively essential, at least pre-crisis, right?
Yeah.
How have the dynamics of milk consumption really changed in the past year or two? And in fact, what do you consider as a temporary change versus what is really permanent, or that's going to be a little bit more long lasting, as you see?
Yeah, what we have seen in the milk powder category, if you take pre-COVID, there were about 7,000 tons of metric tons consumed in Sri Lanka per month, roughly. Now, during the last 3 years, due to the crisis, it has come down to 3,000 tons right now. So there's a huge drop, more than it's not even half. The key reason for that is that if you take the dollar pre-COVID, as Sabrina very rightly said, is that the went up from about 196 to 320. The world market milk prices went up, and then of course there was a tax of about 800 rupees. So all these three factors really put. I'll give you an example. The 400 gram pack of milk is the most, like 80% of the market is that. Went up from 375 to 1,100. So it's threefold. Now, milk being an essential category, the consumer authority, all these, the finance ministry, they monitor the margin. So it's from the manufacturer's point of view, it's a very one-digit 4-5% margin. So really, these macro factors contributed for the price increase. What happened to the consumer? If you take 5.6 million households, it's a 100% penetrative category, like biscuit and milk both. According to the latest research, is that almost like 1.7 million went out of the category from milk. So that's like 1/3. So last 6 months, fortunately, about 1 million has come back. But again, the overall consumption has dropped. That's why the 7,000 has come down to 3,000. What we feel is that though it's an essential category, to come to pre-COVID level, like 7,000 tons, I'm talking the total Sri Lankan consumption, may take minimum 2 years, minimum. It's a very slow progress. We strongly feel the bad period is over, so, but it's a very slow progress, yeah.
In terms of milk powder prices itself, or milk in general, I think that we've seen a bit more stability in the last couple of months. I think world milk prices have also adjusted.
Yeah.
Even locally, there's been a bit of help in terms of the cost side of things.
Yeah.
Do you see that as being possibly a reason that people may start consuming a little bit better because price levels are stable and there's a little bit more push from that side?
Yeah, because all these milk powders are imported, so it's a very US dollar dependent. Of course, global prices also fluctuates, but that fluctuation is about 15 to 20% max. So, yeah, because of the dollar stabilization has a direct impact, and since the dollar is that's where because at that journey 190 to 330 was a extremely volatile situation. But now is situation like last week there was a reduction of 150 rupees a kilo, so that's clearly an indication the prices are coming down. But unfortunately, the latest, if you take today, the global milk prices are going up again. So it's a bit of a hybrid situation.
Right.
But as you said very rightly, I don't think that from 375 going up to 1,100 that last 2.5 years, it will never happen again. It will never happen again.
If I can just press in terms of milk consumption, I mean there's liquid milk as well as the milk powder consumption.
Yeah.
Which categories have seen the biggest impact, and which do you think will pick up the fastest?
Oh, liquid milk, if you take currently Sri Lanka, the current liquid milk production is about 450 million liters for a year. So out of that, the white milk consumption is about 50 million, or sort of 10%. 100 million liters of milk used to convert into powders in Sri Lanka. There are some local brands. So the balance is yogurt, ice cream, etc. So there's a growth, but very small. So I think despite all the support given, the growth is what we have seen is not very rapid. Yeah.
Right.
Due to the price and the convenience. Yeah.
Thanks, Mr. Ravi. Moving on to the durable side, Mr. Mahesh, what is your outlook in that segment? I think that probably has been hit the hardest compared to some of these other categories we're talking about. What are your expectations on that going forward?
Firstly, thank you for having me here. So when you generally ask consumer durable sector outlook, we normally say good and positive. Uh, why I say that is if you look at the business that we are in, you can describe it as a business that we are in the elevation of living standard of people. We are into the enriching or elevating the living standard. So this, irrespective of the consumer segment or socio-economic segment, with from very, I would say, the ones with the lowest disposable income to the highest, that they aspire to live better. Their need remains to live better. So that's the reason that we say it's always good. So if you look at a few examples, say if somebody is using firewood to cook, they'll want to surely have a gas cooker to upgrade themselves. So if somebody is using to wash clothes, their hands, they want to obviously get a washing machine. Take for example, if people are using feature phones, the majority of them will dream to have a smartphone in their hand. And for another, say, watching a black and white TV or a small TV, they want to upgrade it to a larger TV. So this need remains always in whatever the category you are in. So that is one of the reasons we always say it's good. Take second, if you take the population of Sri Lanka, 21 plus million or 5 million households, the penetration levels of these goods are not very high. Certain category of TV will have a fairly large penetration, but others, if you take 60%, 40%, 70%, so there is room for further penetration. So that's the second reason why we think it's still a lot of market out there is the level of penetration. Thirdly, if you can take the upgradation of these products, these products keep changing, and the innovation, the changes, I would say eco-friendliness, all that changes, and people also would go with that changes. The life cycle of the products are also changing. So if you consider all these factors, there is a lot of market out there. So it's a matter of people having that ability to purchase and acquire these. So it doesn't mean that this we will consistently get a growth cycle of a very positive growth. We'll always have the usual roadblocks and stumbling blocks, like if you take the last 2 years, the most recent difficult years, it all came down in a major way. The numbers, the volumes that we used to sell came down. So this will always be there, but overall we see a positive thing from an outlook perspective, from a long-term perspective, that so there is a lot of market out there due to those factors that I mentioned.
Okay. Just kind of focusing a little bit in terms of the near term, and we are entering kind of a seasonal period for particularly consumption and maybe durables a little bit more as well. Yeah. How do you kind of compare it this April versus say last April or a pre-crisis period, and maybe with the most recent December, which was quite positive?
So this April we expect to be better than last April. Obviously last April was quite a bad one with all the adverse factors hitting us. But if you take the pre-COVID levels, the numbers that we sold are much higher. The volumes are much higher. Only thing from a revenue perspective, with the inflation pricing being adjusted, we will still come close to the previous numbers. Right. But what matters is the volumes that we used to sell. As Ravi mentioned, the volumes are lower than what we used to sell. So that will take some time to adjust. But as far as the seasonal period is concerned, season is always, there is a peaking of numbers. So December was a good month, obviously with the Christmas season. And there's this VAT impact, the people are a little panicked about the VAT change, and they advance their buying in December. So April also we expect a good season, with also the macro factors like harvest being good and tourism being good. So these things will help. And also the interest rates are lower, people will spend a little more money.
Sure, yeah, that actually it's to my next question. What is the biggest driving factor that you actually see for your sector? Is it price? Is it necessity, because they've delayed purchases for a while? Is it lower borrowing costs, or is it macro factors like you mentioned in terms of better agri output and so on?
If you look at our industry, even if you check on a long-term basis, it has a direct correlation to the GDP of the country. When the country is doing well, the GDP is well, GDP is going positive, our industry will always get a positive correlation to that. When the GDP is down, if you take the last 2 years where we saw the negative GDP, obviously the businesses go down in our sector because of that discretionary spending on that prioritization of the product. So one thing is that. The second thing is per capita GDP. We can see from a regional perspective, countries where the per capita is about $5,000, $6,000, it elevates the overall level of this industry to another level because they want to live better, so they acquire these consumer durables to live better. So Sri Lanka is yet to come to that standard. So if the per capita goes up, we'll definitely see their level of living in a different level. So for example, say in countries like Malaysia or Thailand or Singapore, 32-inch TV is no longer a kind of a hit product because they are able to afford 55-inch 40. So those are their primary products. Whereas in countries like Sri Lanka, that is still a key product. So likewise, the answer to your question, we are actually in a contracted level. The market shrunk a lot in the last 2 years. So from this point onwards, growth facilitator could be the kind of availability of people adjusting to the right pricing now. Mm-hmm. The current market pricing, it will take a while, but they no longer can expect the prices that were there 2 years ago. So people are slowly adjusting to that. Then also, if the prices, even the sellers, as sellers, we also need to bring the right pricing to the market. Otherwise, we will have an issue in maintaining volumes. So, and the creditor, where interest rates now coming down to about 11%, also makes them actually spend a little more. They don't see keeping that in a fixed deposit, but they will prefer to upgrade their house or kind of renovate the household, so that they can actually invest on more capital goods. So that will drive as well. So there are multiple factors, I would say, adjusting to the right pricing, and also help with this low interest rates and also the credit offered by the banks compared to those days.
Right. So moving back to you, Mr. Ravi, and he spoke about some of the factors that's affecting in terms of his industry, but in terms of, say, both confectionery as well as milk powder, we've seen an elevation in pricing levels, of course. How sensitive is price right now or going forward? How sensitive do you think consumers are to it?
I think that both categories, biscuits and milk, though it's almost like essential biscuit, it's like a staple food here. It's pretty like what we have seen. I'll give you a simple example. How sensitive the price offers offered by the supermarkets. Generally, if you give 10-15% pre-COVID, there is always 20% increase. But now, if you give a pricing reduction, the sales goes up beyond 25-30%. So people, what we have seen, though we have strong brands, there is a bit of a shift from brand loyalty to price loyalty. Okay. So there's a segment of people. So it can be temporary, but that's happening. So we are very conscious of the fact that because consumer also been pressed due to various factors, her income has dropped, the prices have gone up. So she's also very choosy of what she's selecting or what she's buying. So that's a bit of a fine line. But the last 6 months, what we have seen, I'll give you a simple example of biscuits. Biscuit pre-COVID, there were about 10,000 metric tons consumed across, like there are about 40 manufacturers in the country. And that 10,000 dropped to 6,000 at the peak of the crisis, so almost 40% decline, first time in Sri Lankan history. Now if you take, the 6,000 has become 8,000, so there's a bit of an increase, but not really the original level. Slowly it's coming up. As Mahesh said, the revenues are okay because of the price, but we are more concerned on volume. So people are coming back to the category, but I'll give you another example. If you take biscuits, roughly these 500 gram packs, the category was contributing, 70% was coming from that. Because when you have a family of 4, you take 500 gram pack, whatever the brand. Now that has dropped to about 40%. So people are going for a smaller pack sizes. I want to give biscuits to my kids, so because the price factor I go for down. So that has happened. Even milk, 400 gram has dropped from a 70% contribution to about 50% contribution. That we have seen it, yeah.
Right. In terms of supply side factors, right? So there's been a lot less supply side disruptions compared to what we've seen in the last 2 years, at least in the last few months, right? And also currency appreciation that we're seeing right now in quite a strong way. Is there a possibility, as you said, to drive volumes that the industry as a whole, now we've seen prices escalate, is there a level of downward adjustment that we might see, not just in your category, but even in terms of other categories that you are seeing?
So what we have seen, like VAT increase from 15 to 18, for biscuits we are not taking a price increase, so it hits the entire category bottom line.
Yeah.
So we are really, it's a short-term pain for the industry, but we are taking that. So currently it's a more than the growth, it's a bit of a survive and slowly take it. So we are wearing the consumer's hat because we have to be conscious of that factor. So that's why we feel this coming financial year, starting from 1st of April, is that we will go more on a kind of a VFM category, the value for money category we have seen is growing. So we are putting some innovative products in that category. So we have to adjust our marketing strategies also according to the consumer behavior. So that's we are very, very conscious of, because biscuit is generally a poor man's product, and even milk. So we have to be conscious of that factor. But as an industry, I'm pretty sure that we'll bounce back, because biscuit as per capita consumption in Sri Lanka is one of the highest in the world. So it's like a staple food. So always from a crisis, it's easy to bounce back.
It's good to hear. Sabrina, moving back to you. In terms of Hemas's product offerings itself, just diving into the specific products, what have you seen that has been most stable even during the crisis period? Okay, I'll just start off with that question. I have follow-up, but I'll start off with that.
Sure. So I think as Ravi said, what we sort of saw in the crisis is three groups of consumers emerge. There was a group of consumers who were very conscious about a price point. So there were some magic price points, like the 100 rupee price point, the 150 rupee price point. And they didn't mind taking a grammage reduction as long as the price point was kept stable. So they were typically your daily wage earners and so on. There was a second group of consumers, which we now call the discount seekers, who were willing to completely change their behavior. They were willing to trade out of sort of product performance. They were willing to switch their favorite brands. So here, everything was up for grabs. And they wanted a product that could do the job. It wasn't a brand. It wasn't necessarily the same benefit. They were willing to trade off quality. And so I think that was the second group of consumers. The third group of consumers really felt, okay, now these products have doubled in price. Are they worth what they cost? And so here consumers actually wanted more value. So I think companies that moved into giving the right pack size, companies that moved into creating more fit for purpose, value engineered offerings for this discount segment that was willing to trade out of benefits, and companies that were also really focused on strengthening their core value propositions and their core products to actually worth more than their cost, I think typically emerged ahead, and that's kind of what we focused on at Hemas. In terms of specifics, there were some categories that we realized were much more resilient than others. Particularly, and they fall here into two categories. One is our baby care portfolio. We realized even in the worst of times that mothers weren't willing to compromise on the products that they were buying for their babies. So they would give up shampoo for themselves, but they would continue to buy everything that they used to buy pre-crisis for their babies. So I think that demonstrated significant resilience. Secondly, there were categories where there weren't alternate, like substitutes, or for example, they had really high barriers to entry because they're products that are difficult to make. So particularly the oral care categories, so the Clogard business was something that demonstrated high degrees of resilience, and even our shampoo business actually, because their substitutes aren't so easy to find, and even if they are, trust is super important, right? So I think those are the core parts of the business that remained resilient even through the worst of times.
So within those three categories that you mentioned, I think I'm not sure which category this falls into, but I mean Hemas offers also a premiumization in terms of their products, right? Are you seeing some in certain categories, at least the ones that seek value, that they are maybe trying to slowly try to premiumize their product after downgrading for a while?
So I think for us, I mean, a clear strategic shift that we're keen to make in the company, that we weren't keen to slow down on, was this move towards premiumization. And for us, premiumization doesn't just mean a higher price point, right? It's about finding unmet needs and improving sort of the efficacy of products that meet those needs. And so it's still value for money. You're just giving a better product. And there are two trends that haven't changed even during the crisis. One is we see Gen Z consumers actually having much more buying power than, say, their baby boomer parents, right? And because they've picked up sort of freelance gigs, they're doing multiple jobs, they're influencing, and so this is bringing them a lot more disposable income. And of course, they live with their parents, right? So the cost of living pressures don't impact them as much. So we find that if you put out the brands that are more sharply positioned to Gen Z consumers, that are customized, suited for them, we find not only were they resilient, I mean they grew double digits this year, but also those consumers were willing to pay more. So that gives us a path to premiumization. Secondly, and probably much more demographically significant, is the growing economic independence of women. So we found more women are going to work because a dual income household now is almost table stakes. And so this has opened up a path to premiumization in categories like face care, and even categories where convenience is important, like sanitary napkins and diapers, where if a woman is spending more time out of the home, if women are going to work, she's going to need a set of products that she's willing to pay for so that she can continue to be at work. And so here, even these categories kind of grew double digits for us. So I think for us, our premiumization strategy is not so much dependent on the macros. It's more dependent on the opportunities or the white spaces we can find, and that's not something we were keen to slow down on.
That's very interesting in terms of the demographic split. But I mean, looking at Sri Lanka as a whole, how do you see patterns changing within Colombo, suburban areas, rural? Are you seeing, what are the high growth regions you're seeing right now?
Yeah, but you touched on patterns, and I'll maybe take that first.
Sure.
That's something that's been really interesting for me, because previously you have a wide gap in consideration or like consumption needs between rural and urban markets, largely because of access and also because of information. But now I think because distribution in the country has got much better, and also social media has played a huge role in actually narrowing the preference gap between urban and rural. But sort of on the spending side, I mean, I said this earlier, but I think the rural economy will bounce back much faster than the urban economy, for two reasons. One is because it's been a good agricultural season, tourists and remittances, that income will trickle down. And also it's important to remember that rural consumption typically is a largely essential basket. So it bounces back quickly because they're coming back into essential categories quickly. Whereas the urban basket has a lot more non-essentials in it. So they're much, I mean, before adding that back, they typically wait for much more stability in the household before they do that. So that's kind of the peculiarities, but overall rural demand is definitely ahead of urban demand bounce back at this point.
Thanks, Sabrina. And kind of moving on from that point, Mr. Mahesh, for you as well, how are you seeing the demand patterns changing for durables within Colombo, outside Colombo, and what areas again are hotspots for you that you're seeing much more interest?
Similar, I would say, because of our geographical presence and also the demographics that we cater, we cover quite a lot of consumers. So we also saw that there is a kind of a pickup coming more from an from a rural side, because of that need of the basics that they want to achieve. But in the urban sector, but they wait and see. Normally they just do more study. They basically do a little more research than others to understand what is where the pricing is going to move, whether the dollar is going to come down, what will be the pricing. So their basket size is also bigger. So because of that, the spending, they are a little more careful in spending. So, but overall, what we have seen is from a company's point of view, there is a cash uh, level spending of about 60%, whereas the rest of them go into about credit. Of course, Singer has this unique hire purchase scheme, which caters to about 30% of our business. Then comes the credit cards. So that kind of mix is there. So product wise, if you take what is actually keep going is something which obviously everybody like to keep this communication thing going. So the information has become a priority for everyone. Sometimes they might not eat, but still use the phone. So the mobile phones, smartphones is still going despite all these issues in terms of spending power. They will prioritize that as a need, and then comes the rest. So from a area point of view, north and east, we saw a kind of a steady kind of a flow in sales because they were getting money. There is some kind of a money flow coming through them because they must be getting through the foreign remittances. So that spending was there throughout, whereas certain segments in the middle of the country, especially if you take the north central central side, they are the one who got worst hit, I would say.
Sure. In terms of just speaking in terms of the cash purchases you were talking about, how cash and credit, in terms of banks' willingness also now to open credit to companies like Singer, offer more payment schemes, how has that uptake been?
Yeah, because there was a time where even banks took a step back and did not allow credit. So you could have seen the disappearance of the zero interest schemes for about a year, but now they are back. So that allows a lot of consumers to come back into a kind of a easy payment scheme through credit card. Then also in facilitating kind of a businessman to get into economic activity through the banking system is again open now. That also create a lot of opportunity in the certain segment, the SMIs, the small timers who are also into tourism. They all need our goods basically. The tourism is opening up. They need the furniture, they need the air conditioner, they need the fans, they need the television. So they need that banking, the financial support as well. So the banks opening up in credit for them is also a good thing for us. Then the other thing is even kind of our own entrepreneurs who are into businesses, now they see a little more positivity through the banking system. So credit growth is important, that credit offering is important for us to grow. And we see a decent growth in the credit card side compared to 6 months ago and today. Quite a lot of people now opting for credit card payments.
And just before we move into our final question, before we start on the Q&As, same question as I asked Mr. Ravi. In terms of supply side, I think things are a little bit better, import bans are off, and currency is appreciating as we mentioned. Would you and the companies within your sector again look at pricing revisions in order to drive volumes, or is the impact of VAT and so on really kind of still eating into your margins and you're unable to actually move too much on price?
Well, I think it's a very delicate balance we need to maintain because the constant shocks that we went through, the taxes, the duties, the forex rates, interest rates, all needs to kind of get into this margin formula. So it's a delicate balance with pricing, volumes and margins. So basically you need to focus on a daily basis. If you miss out, this is where basically you can actually lose full control of the whole thing. If you take retail, retail is predominantly driven by growth, volumes, because you have a large cost structure in the middle to maintain showrooms, all that is huge cost. So, and we make a relatively a smaller profit because growth is vital. So if you try to manage margins at the expense of growth, again you are actually getting into the wrong thing. So it's a very delicate balance that you need to maintain. So asking on the pricing, answering that, actually we need to be very kind of conscious of what the pricing should be to make the numbers move. So we need to pass on the benefit to the consumer so that the volumes are still maintained. For example, the recent USD rupee appreciation, there is a benefit to the import. So we basically have to pass on. Now, already I can see from March, companies have reduced prices because you need to maintain, you need to keep that number sticking. But you can't basically keep a blind eye on the margins also. It has to be there. So these are the three factors you need to maintain. The good thing is the VAT impact is somewhat negated by the currency. Although it's a 18% jump for many products, from 0 to 18 is a big jump, and some of them from 15 to 18. But the appreciation of the currency to about 300 is helping us in that way to bring the prices down. So that's one thing. Then also we see these interest rates coming down, so it also helps on the finance cost side. So those are some of the positives that we can. You don't see that prices going up anymore due to balancing of these various other factors.
Right. With that, I think we'll move into our Q&A session. I think there's one question that has come in terms of how election cycles can impact consumer sentiment. I think typically it tends to be positive, fiscal easing and so on. What are your expectations going into this election season? Is it going to be similar? What are the nuances of it? Open to anyone who wants to take the question.
Yeah, I think this, we know that the election is going to happen this year. One of the things we are concerned is that how the whoever comes into power, that the market stability. So from a company's point of view, I hope and pray that the stability of the market will remains, because for us there's a lot of consumption opportunities, to be very frank. You know, people eat a lot of biscuits during that time. So, but other than that, on a serious note, that's something. End of the day, it's beyond our control. So what we do is that we are trying to be right on top of things that what we can control, and so that's what. So we are not really thinking it too seriously. That's the best thing to move forward as a company, because that is something which we have to be. We are watching the situation, but not putting much of an effort, sort of energy behind that, because that's beyond our control.
Anyone else would like to?
For us, I think it's sustainable consumption that we want, and so I think Sri Lanka is on a path with almost zero room for error. So for us, we worry about those macroeconomic errors that can put us back where we started. So there may be a short-term boost in consumption, but I think what we're more concerned about is ensuring that over a period of 5 to 10 years that there is sustainable recovery in GDPs.
Yeah, so if you take an election year, generally it's good for businesses, for ours as well. Consumption increases, but as long as that election has no disturbances, no violence, it's a peaceful election. As Sabrina said, what matters is not the short-term gain that we want to see. We want to see a very long-term stability, where businesses can forecast, businesses can strategize and keep going. So that is the worry we have, because we have had a lot of bad experiences. We just survived a crucial period, I would say, one of the worst ever periods in our history. So what more can happen is the problem. So the question is, if there's consistency, there's stability in policy standard, there's a business angle to these policy making, we will be fine. So as long as there's no major disturbance in the elections, otherwise it's good for businesses. The people will buy TVs to watch the elections. People increase their consumption, honestly, during election period. There are always benefits passed on, which is a typical thing with nothing to hide. During election years, salary increases to government sector, all those will trickle down to our businesses at some point. So these will come back, but as long as we are not seeing something disturbing or violence or anything, and more than anything else, the future is the key thing.
Got it. In terms of, there's another question here, and I think it's directed at Sabrina. To what extent is it possible to do price differentiation in terms of targeting different consumer groups, from premium to middle to the lower?
Yeah, I think it's not so much about price differentiation as product differentiation. And so, if you've identified a set of needs that require a product with a higher level of efficacy or with a higher experience, for example, I have a fairness cream in the market at X, I can sort of sell you a product that kind of gives you more tangible benefits in 14 days, something better suited to your needs. I can charge a 20% premium for that and still grow volume. So I think it's not so much about price differentiation. It's really about product differentiation. And what we found is, sometimes even 100% more than mass categories, consumers are willing to pay as long as your product delivers a benefit that they think is worth it.
Yeah, just to add to Sabrina's, like when you're going up in the value chain, there's a segment of people will pay a higher price for better benefits. Now, to give an example, we came out with a product called digestive biscuits about 6 months back. And if you take price per kg or price per gram, it's a little higher. But consumers feel still it's value for money because that's a benefit you get from that biscuit. There's no other similar one in the market kind of stuff. So the consumer always look at what sort of benefits I get at what price kind of thing. So it's a bit of a trade-off. So that's what we have seen even with the recession. The value-added products are doing well.
Mm-hmm.
So there's a segment who are willing to pay a little extra real price for that extra benefit. In the foods category, we have seen the health and wellness. Now we have come out with a 30% less sugar for lemon puff, ginger nut, and chocolate. It's doing pretty good because you have the same sort of pleasure of eating a biscuit, cream biscuit, but 30% less sugar. So there's a small price premium, but the consumers are willing to pay for that.
Just one more thought from my end. I think it's also really important to realize that there are some categories or some products that have reached that threshold of improvement, right? So, how much more benefits can you give in a soap? How much more benefits can you give in a laundry powder, right? So those categories, room for price differentiation is probably much less. Whereas there are some categories where, for example, like hair care and face care, for example, where the quantum of needs are increasing faster than actually the products in the market. So there is actually a ton more room to add benefits in a way that's adding value to the consumer, and therefore she's willing to pay more. So so it depends category by category. It just depends on whether the product has reached the threshold of expectation or not.
Okay. Just moving into another question here, again very near term. With the end of the financial year, usually you see an adjustments in terms of salaries and wages and so on. Again, to what extent might that ease in terms of a consumer's purchasing power, and do you typically see an uptick? Is it only because of its seasonal impact, or do you see it from a wage perspective which is a little bit more sustainable, I would say? How would you see that?
Yeah, I mean, we're eagerly looking forward to apparel bouncing back and increment season to happen. And so I think that it will take the country, I think, about 2 years, right? Because if you look at inflation, real inflation, wage inflation didn't happen at the same pace. So I think we're in that adjustment cycle right now. And so I think this is the year where wages probably inflate faster than real inflation. And hopefully by the end of this year, we'll catch up.
Yeah. I think the answer I can give is very similar because of the gap has been very steep. If you take the last 2 years, the rate at which the costs went up and the earnings must be flat or slight increase in what compared to, because the companies also could not increase, the government could not increase, but the costs have gone up skyrocketing. So it will take a while to adjust. Both sides, one is the cost coming down due to certain factors, the positive factors we see, and also on a increment side, salaries and the wages going up on a regular basis. I'm sure the companies also have a lot of pressure from the staff or workers to kind of look after them in terms of their ability to kind of narrow this gap. So this will happen. Maybe it cannot be happen within a year for sure. So it will happen within maybe a year or 2 years or 3 years time. But by that time, there will be some kind of equilibrium that things will come into shape.
Sure. I think there's also another one in terms of looking at future trends. There's consumers looking for social, environmental factors, ethical practices, and responsible sourcing as well. What initiatives have each of you kind of taken in terms of moving ahead with this, and I guess how important is innovation in these kind of areas in terms of catering to these growing trends?
Yeah, it is what we have seen. We export to about 50 countries, and our biggest export market is Europe. So this global warming is a big topic right now. So the carbon neutral, already we have got the carbon neutral certificate. So we are now going towards the total operation to be carbon neutral. So that's something which we are looking at it pretty seriously. There's some big investments are going on. That's one side of it, and especially the younger generation are more concerned. That's one, and number two is more sort of regulatory things also coming up. The other one is the disposable, like biscuit wrapping and all that, so biodegradable packaging. So currently there a lot of work has gone through. One thing, we are going to have a right balance, because biodegradable packaging is always costly. So at what price we can do? So in today's context, it's a tough task. But we are doing a lot of research. Industry is doing a lot of research, packaging industry too. But I feel it's on the right track. May take some time, but if you take 5 years ago and now, the focus on the environment and the ethical practices are much more than before.
Yeah, I think echoes similar sentiments, but for us, we look at it in two ways. On the environmental side, until our consumers are willing and able to pay for biodegradable packaging and all of that, it would be really difficult for us to absorb that cost. So I think what we've decided to focus on is collecting more than we put out. And so we've increased our collection efforts, and wherever possible in our structural packaging, we've actually reduced the amount of plastic consumed. So we launched a hair care range under Kumarika. We reduced 20% of the plastic consumed in the bottle. So it's more about packaging design rather than replacing the plastic for us at this point. In terms of the social piece, I think that's a piece where we've been able to make quite a lot of headway this year, particularly in regards to period poverty. So we have a brand called Fems. I don't, people know this, but only 1 in 3 menstruating women use a sanitary napkin on a monthly basis, and this has huge ramifications on menstrual health and hygiene. So we've actually partnered with schools and CSOs to go into both government factories and schools to educate women on the importance of using these products. So here it's not just about the product that we sell, but holistically removing the barriers to access. And so these are how we think about ESG, and we have fairly focused programs to address both of them.
Thanks.
From our sector, what we are looking at is more into energy efficient product. So if you look at now from the products that were 5 years ago and today, we have seen a lot of more energy efficient products in terms of inverter technology or that has come in, which consumes less energy. Also, something I would like to be very specifically mention is our refrigerators we all sell here, produced in Sri Lanka in our own factory, are all zero ozone impact gases. This happened almost 10 years ago. Not many people are aware of it. We are the first company to introduce in Southeast Asia. So there is no zero impact on gases for these from the refrigerators that we produce. And with heavy marketing, basically the entire country has now changed it to zero ozone impact gases. Nobody imports because the numbers that Singer and Cecil was producing, even the international brands have to change and bring it to Sri Lanka. So that's a lesser known fact, but it's a hugely impact to the environment. Then also we are looking at the entire cycle of a product, from the manufacturing to the basically the end of the life cycle, where what happens to the product. Is it waste? Will it just get dumped in somewhere? No, we have to get it to a kind of e-waste recycling level. So we have a very good e-waste collection system running. So it goes into that level of, it is, I won't say we are perfect in this, but we are getting into that. So that the end product is also looked after by the manufacturer or the seller, that it goes into a proper disposal cycle through an e-waste recycle method. So that those are some of the things, and also our packaging also we are slowly changing into out of rigiform into paper pulp to make sure that those are environmental friendly.
Thanks, everyone. And I think maybe one final question in terms of interest rates. There's been a few questions, both in terms of what kind of interest rate do you think a consumer is willing to kind of go out and spend at? Where have you seen that in the past? Are current interest rates comfortable for that kind of growth? And also in terms of a business perspective, in terms of what you would be expecting on interest rates, if you have a view, and how that really impacts your, I think, growth plans.
But just to start on this, if you look at the history of let's say last 10 to 15 years, if you look at take an average, it has been around 9 to 12%. I believe that was the kind of stable rate that we have ever faced, because it has been lower than that, but it lived only for a very short period, and there have been spikes as well. But if you are, I would say the companies will be comfortable if it remains in the range for 9 to 10, 11% is manageable, because we know for a fact that it won't be easy to drop it to the very low levels, as well as we can't survive in a high interest rates as well.
And I think it's important to realize the reason interest rates are being lowered in this manner, right? It's because consumption is just not picking up. So I think for me, I don't know what that right percentage in terms of interest rates are, but I'm certainly hoping that this will stimulate some consumption. And if it does, then I think we have to anticipate interest rates to go up, and the macros will take care of itself.
I also feel because interest rate, if you take, as I said, 9 to 12, and when it goes up, like it went up to 28, then people put fixed deposits, and there's a money circulation, there's a drop. So when the interest rates comes down, people utilize that money so that's good for the economy. Interest rate is one element, but if you get the dollar also settles down to a sort of, I don't know, maybe at what point, but that's because for the consumer's point of view, these two factors has an interrelationship. Dollar has more, because most of our products, though it's locally manufactured, the raw materials are imported. So it's a very high dollar dependent economy. So that's very crucial. Like when we had the dollar managed for 200 rupees for a long time, and then it went to 370, 360. Now it has stabilized around 300, 305. So that's also, it's a positive thing. So if you take the last 1 year, the economy has given a lot of stability. There's a long way to go, but we have seen very positive signs. Yeah.
All right. With that, we'll come to a close on this session. Thank you to all the panelists for sharing your deep insights on the sector, and let's hope for a better year for the consumer going forward. And thank you very much for everyone who joined in, and we'll see you at our next discussion.